This is King World News. I'm Eric King, and you're about to hear our exclusive weekly metals wrap with Ted Butler. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have Rob Arnott from Research Affiliates, who manages $40 billion, legendary technical analyst Ralph Acampora, Rick Rule from Global Resource Investments, Kevin Kerr of Kerr Trading International, and be sure to tune in next week where we will have James Dines, David Tice, Tom Dorsey, as well as Bill Lagner. Joining us now is Ted Butler. Ted, how is the commitment of traders shaping up for this week? What does that look like?
Well, the report that just came out, in a word, is kind of rotten. We did have a fairly big increase in silver by almost 5,000 contracts. In other words, there was a net increase in the commercial short position of almost 5,000 contracts. The Big Four category did add almost 2,000, 1,800 of that increase, and that was a little bit disappointing. We were up maybe 70 cents or so for the reporting week. This ended on Tuesday, and we finished right around the $15 mark or so on that day, and we did have equivalent deterioration. We didn't have a little bit of deterioration, 5,000 contracts, but on a much higher base in gold, so that wasn't too bad, and the Big Four did not increase their short position through Tuesday. However, this is a snapshot as of Tuesday, and as you know, we've had some pretty violent price reaction to the upside in both gold and silver since the Tuesday cutoff, and you have to be looking at changes in the daily open interest since Tuesday and the volume and the price action. There's been I would say a massive further deterioration where the commercials have really increased their short positions since the cutoff, just extrapolating. And I'll put it to you this way, from strictly commitment of traders terms, we're at the worst, the highest commercial short position that we've had in over a year. When we extrapolate on gold, we probably are also at the highest in a year, and maybe the highest, which would also be the highest all time in gold. So before you ask me where do we stand on the percentages, I got to peg it. I get at 100% negative in gold, meaning that this has been the highest, if we extrapolate, the highest we've ever been in the gold short position. Not the highest historically in silver, but the highest in many a moon, and I'd peg it over 50% negative in silver, and I think we were down to 20-25% a few weeks ago before we went up in price. On a straight commitment of traders basis and extrapolating from Tuesday, it's a negative report. There's no two ways about it.
You wrote a new public article today titled Warnings Ignored. You wrote about the news stories coming from China where they were threatening to default on the over-the-counter commodity contracts. Obviously, this is a big deal, is it not?
Yeah, it's a very big deal, Eric. And to go back to the commitment of traders, if you've noticed the last few weeks, we haven't been in a positive commitment of traders structure, but yet I've been saying, there's other things out there, and I don't know if I want to be so religiously matched and influenced by the commitment of traders. And that's been good up until now, because if anybody had shied away from the market strictly because of commitment of traders indications, you would have left a lot on the table. The market did go up since then. And this China story is kind of tied into that, too. In other words, if it was just the commitment of traders and just the commercial short position, it would be extremely troublesome. I'll say this, if we do go down in price, and I'm talking, they smack it for $1 or $2 in silver and $50 plus in gold, we know we're going down for one reason and one reason only, and that's because the big shorts on the COMEX were able to trick the technical funds and get them to sell in a landslide to the downside. That's the only reason we'll go down. But on the other hand, there's this news coming out of China. There's this news that's been developing for the past couple of months with the Commodity Commission and a different view that they're taking of position limits or whatever that may offset this. This China business is very important because at the heart of the commercial or the concentrated short position in both silver and I think in gold over the last 5-10 years has been a backstop from China. China's really been the ultimate big short in this market. They use the American brokerages and banks here to funnel their short positions. It's not that, for instance, J.P. Morgan is sitting with a naked short position in silver. they're sitting with a short position on the COMEX in silver, but they have offsetting contracts and transactions with the Chinese backing them up. And that's why the Commodity Commission has always allowed them to hold this big short position on the COMEX because they see this backing from China. Well, I've warned for many years that, one of these days we could wake up and China, the ultimate short here, the ultimate counterparty, is going to say, I don't want to play this game anymore, and I'm quitting. I'm leaving. And it sounded somewhat far-fetched or, fringe-type analysis coming from a regular silver analyst like myself. But it is a serious issue. Now that China has come out and basically said exactly the same thing that I've been warning about, I think it gives new meaning to this whole structure on the COMEX. If China does, as they claim to be saying, and I gave the sources in the article, Reuters, New York Times, etc., if China does default and walk away from these contracts, these over-the-counter contracts, then there's nothing backing the short position in COMEX silver, or maybe even COMEX gold. And the price action we've seen this week, this news just came out last weekend and through the beginning of the week, and it coincided, very closely with the dramatic price action we saw to the upside. So if that's the cause of this price action, that people are getting nervous that China's going to pull out of the short side and leave the shorts on the COMEX completely exposed, you could have an explosion in price to the upside. I don't know which way it's going to go. We're at a point here where they could smack them down, as they have in the past, because of the overload in speculative long and short positions on the COMEX, or if this China thing develops into a fire, which it very easily could, we could blow to the upside just as easily and more dramatically than anybody could imagine.
What would the implications be then for price? Do you think this is going to set up for an explosion?
Yeah, well, I think we're going to have the explosion. The question is, are we going to have it straight away without any kind of a sell-off, where they try and rig another sell-off to the downside on the COMEX, or this thing kind of overwhelms them and this Chinese starts to dawn on people what the intent of this Chinese news really is. And if there's no backing to this short position on the COMEX, then the regulators just can't sit by and let J.P. Morgan or anybody else hold giant short positions in silver or gold with no backing. If the backing has been pulled away by China, literally the jig is up. The game is over. Manipulative game that we've witnessed for 10, 20 years will be over in a heartbeat. And the only resolution to this particular problem is sharply higher prices and get the law of supply and demand to ration production and consumption and handle investment demand. And it'll be literally a shocking and a golden age. The price action will be such that it would be hard to imagine.
So basically, in closing, Ted, what you're saying is that we could have a smash. It would be orchestrated by the buoyant banks, and that could take gold and silver down, but they're sort of running out of the ability to do this very often, if at all.
Your words I wouldn't want to change them at all. That's a very good analysis, Eric.
Well, Ted, before we sign off here, you have your newsletter, which people can subscribe to. We have information right on your interview page, so they can go right there to look at that.
Yeah, Eric, I mean, that's a place to go. The information covered in the letter is going to be a lot more detailed and specific than what we can cover on these interviews in the time permitted. So I'd suggest people take a look if they think they're interested.
All right, Ted. Well, thank you so much for joining us.
Thank you, Eric. Have a good weekend.
Thank you for joining us at KingWorldNews.com. Remember to tune in next week for another great show where we will have James Dines from the Dines Letter, David Tice from the Federated Prudent Bear Fund, Tom Dorsey from Dorsey Wright and Associates, as well as Bill Lagner from Bearing Asset Management. Also remember to go to our Gold Plus page for exclusive weekly interviews with Ted Butler and Gatta.